Hello, and welcome back to Financial Podcast. I'm your host, Olivia, and today we're diving into the latest earnings report from a retail giant that many of us know and love, Costco Wholesale Corporation. They just released their fiscal third quarter results, and there's quite a bit to unpack, especially regarding how they're navigating current economic pressures like tariffs and inflation. Costco's third quarter performance generally exceeded expectations on the top and bottom lines. The company reported net income of $1.90 billion, or $4.28 per diluted share, for the three-month period that ended May 11th. This is a notable increase from $1.68 billion, or $3.78 a year earlier, representing a rise of more than 13% in net income. Revenue also saw healthy growth. Costco's net sales for the fiscal third quarter came in at $61.96 billion. When combined with membership fees, total revenue reached $63.21 billion. This figure narrowly beat the analyst estimate of $63.19 billion and marked an 8% increase from the $58.52 billion reported in the same period last year. Looking at sales performance in more detail, total company comparable sales were up 5.7% year over year. When adjusted to exclude the impact of gas deflation and changes in foreign exchange rates, comparable sales rose 8%. Matching the overall net sales growth rate. Breaking down the comparable sales by region, the U.S. saw a 6.6% increase. Canada's comparable sales were up 2.9%, but when adjusted for gas deflation and foreign exchange rates, the increase was 7.8%. Other international markets experienced a 3.2% rise in comparable sales. E-commerce sales were particularly strong, increasing nearly 16% compared to the year-ago period, excluding the impact of foreign exchange changes. This highlights the continued growth and importance of Costco's online presence. Membership income remains a crucial and high-margin component of Costco's business model. For the third quarter, membership fee income totaled $1.24 billion. This represents an increase of $117 million, or 10.4%, compared to the $1.12 billion earned in the prior year's quarter. This growth in membership fee income was partly influenced by the company's decision to raise the price of its annual store membership. That increase, the first since 2017, took effect in September 2024, adding $5 to the standard Gold Star membership, $60 to $65, and $10 to the executive membership, $120 to $130. The company ended the quarter with 79.6 million paid household members, a 6.8% increase year over year. Executive memberships, which are the higher tier option, saw even stronger growth, rising 9% year over year to reach 37.6 million. Costco continues to boast a high membership renewal rate, which stood at 92.7% in the U.S. and Canada. While there was a slight decrease in renewal rates attributed to digital memberships, which renew at a slightly lower rate, the overall figure remains robust. Despite the positive earnings and sales growth, Costco is not immune to macroeconomic challenges, particularly those related to tariffs and inflation in non-food items. These factors led to increased costs for the company. For example, Costco faced a $130 million LIFO, or last in, first out, charge in the quarter. This accounting charge negatively impacted the company's gross margins, which still saw a slight increase to 11.25% from 10.84% a year earlier, but the LIFO charge certainly played a role. Foreign exchange rates also had a negative impact, specifically on the translation of international net income into U.S. dollars. This resulted in a $35 million impact in the third quarter. Selling, general, and administrative expenses, or SG&A, increased year over year. This was primarily driven by investments the company is making in employee wages and costs associated with opening new warehouses. However, Costco's management highlighted several strategies they're employing to mitigate the impact of tariffs and inflation and continue offering competitive prices to members. CEO Ron Vatras discussed these efforts on the earnings call. One tactic involves rushing orders to get shipments to the U.S. ahead of anticipated tariffs. This helps the company secure goods before the higher tariffs take effect on those specific imports. Costco has also been rerouting goods. If tariffs increase on items from certain countries, they look to ship those goods to non-U.S. markets where the tariff impact might be different or less severe. Another key strategy is leveraging their private brand, Kirkland Signature. By sourcing more Kirkland Signature items in the countries or regions where they are sold, Costco can potentially reduce the costs associated with international shipping and tariffs. The company's large size gives it a stronger negotiating position with suppliers compared to many other retailers. This scale helps Costco work more closely with suppliers on pricing, even when faced with rising costs due to tariffs. It also allows them flexibility to rotate to other items if needed. In some instances, Costco has chosen to absorb tariff-related cost differences rather than pass them entirely onto the consumer. CFO Gary Millerchip mentioned that they felt it was important to eliminate the impact of cost increases on members for these staple items by working with suppliers, finding internal efficiencies, and accepting that there might be a margin impact on those specific products. On the other hand, for items considered more discretionary, such as flowers, also imported from Central and South America, Costco did decide to increase prices to reflect the higher costs incurred due to tariffs. This demonstrates a selective approach to price adjustments based on the nature of the product. Costco also highlighted areas where they have actually lowered prices, even amidst the inflationary environment and tariff concerns. They mentioned reductions in the price of items like eggs, butter, and olive oil. Furthermore, the company is focusing on enhancing value propositions that encourage members to sign up or renew, such as extending the hours of their gas stations, which offer discounted fuel. This strategy aims to drive traffic and reinforce the benefits of membership. From an expansion standpoint, Costco continues to grow its physical footprint. The company opened 9 new warehouses during the fiscal third quarter and has plans to open an additional 10 in the fourth fiscal quarter. Capital expenditure for the third quarter was approximately $1.13 billion, with the full-year capex estimated to be over $5 billion. This significant investment supports the ongoing expansion and operational improvements. Turning to the market reaction and analyst sentiment, following the earnings report, Costco's stock price saw a positive response in trading, up 3.4% to trade at $1,042.50 at last check on May 30th. While shares did dip slightly immediately after the announcement on Thursday, they were pacing for their first gain in 3 sessions and surged to their highest level since March. Despite the third quarter performance, the stock faced some overhead pressure around the $1,050 level. Nevertheless, the security boasts a healthy 27.9% year-over-year lead and is pacing for its 4th monthly win in 5. Analysts have reacted favorably to the earnings beat and the company's strategic positioning. The equity attracted no fewer than 4 price target hikes in response to the results. For instance, Morgan Stanley raised its price target for Costco. The firm adjusted its objective to $1,225, up from a previous target of $1,150, while maintaining an overweight rating on the stock. Looking at the broader analyst community, based on one-year price targets from 31 analysts, the average target price for Costco Wholesale Corp is $1,075.04. The highest estimate among these analysts is $1,225, and the lowest is $890. This average target implies an upside of about 6.57% from a recent price of $1,008.74. The consensus recommendation from 39 brokerage firms also indicates positive sentiment. Costco's average brokerage recommendation is currently 2.2 on a scale where 1 is a strong buy and 5 is a sell, placing it in the outperformed status. Analysts generally hold bullish ratings on the stock and view Costco as well positioned to handle the uncertain macroeconomic backdrop. UBS analysts, for example, stated that Costco can navigate these challenges better than most retailers due to its ability to adjust product offerings and its scale. They also noted that the impact of the membership fee increase, which began to positively affect profit in the second half of fiscal 2025 and is expected to continue into fiscal 2026, provides high margin revenue that gives Costco more room to absorb tariff impacts without necessarily raising prices. Overall, options volume on the stock has been running significantly higher than the intraday average. On May 30th, volume was running at 5 times the average, with 41,000 calls and 29,000 puts traded so far that day. Options traders were already firmly bullish on Costco prior to the upbeat quarterly results. The 50-day call put volume ratio across key options exchanges, ISE, CBOE, and PHLX, sits in the top percentile of annual readings at 1.51, indicating a strong preference for call options. The most popular options contract traded on May 30th was the expiring weekly 5:30 10:50 strike call, where positions were actively being opened. This suggests traders were betting on the stock price potentially reaching or exceeding the $1,050 level by the end of the week. Looking further out, forecasting where Costco's stock might be in 5 years involves considering its growth trajectory. The company's growth is relatively predictable, driven by new warehouse openings and same-store sales growth, along with increases in membership income. Based on recent trends of adding 23 to 29 warehouses per year, it's reasonable to assume Costco could add around 26 warehouses annually. This could bring the total number of warehouses to approximately 1,020 in 5 years, expanding its presence both domestically and internationally. Assuming comparable sales grow by about 5% annually, adjusted for currency and gas, and factoring in the impact of new stores, total revenue growth could be around 7% per year. This projection would see net sales increase from $249.6 billion in fiscal 2024 to an estimated $350.1 billion by the end of fiscal 2029. Membership income, which was $4.8 billion in the last fiscal year, is expected to see a significant jump in the first year of this 5-year period due to the recent price hike, potentially increasing by 15%. Subsequent years could see a more modest growth rate, perhaps around 7% annually, reflecting member base expansion. This could bring membership income to around $7.2 billion. Combining net sales and membership income, total revenue could reach approximately $357.3 billion in 5 years. Regarding profitability, Costco's gross margin is likely to remain relatively stable given its commitment to low prices and its typically lower margins compared to other retailers. The gross margin was reported at 11.25% in the most recent quarter and averaged 12.7% over the last 4 quarters. SG&A expenses as a percentage of revenue have shown some improvement in recent years, settling around 9% over the last 4 quarters. There is potential for some margin expansion over the next 5 years, possibly from an operating margin of 3.7% to 4%, partly benefiting from the increased membership income, which flows directly to the bottom line. If the operating margin reaches 4% on projected revenue, operating income could be around $14.3 billion. Considering factors like net interest income and a stable share count, along with an estimated 25% income tax rate, earnings per share could potentially reach around $25 in 5 years. This would represent a significant increase from last year's EPS. However, when evaluating the stock at current price levels, some perspectives suggest the valuation might be quite high. At a share price exceeding $1,000, the stock is trading at more than 40 times the estimated fiscal 2029 earnings per share of $25. This high price-to-earnings multiple suggests that the market might be anticipating faster earnings growth than these projections, or expecting additional benefits for shareholders, such as special dividends, which Costco has historically paid periodically.
While Costco is widely recognized as a well-managed and dominant company in the retail space, some analysts suggest that the current stock valuation is quite stretched given the projected growth prospects. The stock's GF value, an estimate of fair value based on historical trading multiples, past growth, and future estimates, suggests a potential downside from the current price. Based on one estimate, the GF value for Costco in 1 year is $713.19, suggesting a downside of 29.3% from a recent price of $1,008.74. This perspective indicates that, despite the company's strong performance and growth plans, the current stock price may already fully reflect or even exceed its intrinsic value based on standard valuation models. Therefore, while the company's operational performance and future growth trajectory appear solid, potential investors might consider waiting for a more attractive valuation level before buying the stock, according to some market commentary. In conclusion, Costco delivered a strong fiscal third quarter, surpassing revenue and earnings estimates and demonstrating robust sales and membership growth. The company is actively implementing strategies to counter the impacts of tariffs and inflation, leveraging its scale and membership model. Analysts are largely positive on the stock, raising price targets, but valuation remains a point of discussion given the recent run-up in share price. The company's long-term growth plan, involving warehouse expansion and continued membership growth, provides a clear path forward, but the current stock price appears to price in a considerable amount of future success. That maps up our look at Costco's recent performance and outlook. Thank you for joining me on Financial Podcast. I'm Olivia, and I look forward to bringing you more market insights next time. Goodbye.